Ladies and gentlemen, welcome. This is Christopher Aaron. It is July 25th, 2018. We're going to focus on the silver market in this video. We have not looked at silver in a number of weeks. This is really important, what is happening here. I hope by this time in your study, in your independent research of the precious metals markets, you have begun to discern who are those individuals who continue to say the same thing week after week, month after month, year after year, despite what is actually happening to the market itself, and who is attempting to align themselves with the reality that we find in front of ourselves. This is going to be such a huge transfer of wealth when this market happens. You know, the fundamentals are already baked into the cake, if you ask me. It's like the ingredients have been put together, it's there, it's ready to be put into the oven, but it's not on yet. The oven is not on yet. That is the evidence that we see in front of ourselves. It's really a question of timing. And this is a psychological phenomenon that we are going to witness unfold in front of us, where the world is going to, for the first time in its history, awaken together, where every fiat currency will become suspect more or less simultaneously, give or take a few years. That will be the fundamental backdrop. It's already there. But the psychological component, when does the market actually care about these fundamentals? That is the most important thing, because if we're not following that, then we could get burned out, we could invest too early, we could not pay attention to these warning signals as they are manifesting in the market. And let's be honest, what is the ultimate thing that really matters here? What are we actually concerned about? Well, a few things, if you ask me. Liberty, freedom, the ability to transfer sums of capital outside of the banking system. Those are all important things. But from an investment standpoint, what are we generally looking for? It's what is happening to the price. I mean, if you could tell me one other thing that is more important than what happens to the price, I would love to know it. So we're looking at gold here. We're looking at the attempt to recover. Thus far, nothing has changed in the technical model of the breakdown that we were looking at last week. Let us look at the silver price, and silver has had an important failure here. And so if someone is telling you not to pay attention to this because any day now or any week now, fill in the blank is going to happen and the market is going to explode higher, I would just say, well, show it to me. If the market knew about this, if the market knew this so-called story or fundamental, we would see it here. This is going to happen eventually, but let's try to align ourselves with the actual timing that the market is showing us so that we don't get so frustrated over the short run. There's no need for it. So we look at these trends. For example, we were looking at the rising trend from the low, from the 2015 bottom. This was the low of the bear market as we know it. We're seeing the attempt at a rising trend here. Notice that when the trend was broken here in early October, this trend was basically unable to be recovered. Some attempts to recover the trend a few weeks later, a month later, for a couple of days at a time. Notice the failure as that trend, after the trend was broken. Failure. And notice the trend was simply never recovered again in the silver market. So anyone who's telling you that it's not important to pay attention to important trends, and it depends how you draw these trend lines. I see some people who are drawing, trends from points that are not related to the bottom or not matching up with the important lows. And so it does matter where we draw these trends from. But anyone who's telling you that it's not important to monitor these signals here is simply not paying attention to the actual direction of the market, which in my opinion is the most important thing that we can pay attention to. Let's look at some subsequent trends here that developed, the waves of a downtrend broken. Notice how this trend was broken here in February 2017. And notice that the trend, once broken, acted as support. So support, flash crash here for a brief 24 hours, falling back into this support region, the market was very uncomfortable. It was a 24-hour boom and recovery. Very uncomfortable being below a broken trend line for any significant period of time. So this is the importance of monitoring these trends. If you can tell me that these lows here were random based on where the former highs matched up here, that would be an absolutely fascinating story, but I would have to say that I disagree with you because we can very much see where these lows are coming in here. There is a rhyme and a reason to how the market is moving. What do we have next for the silver market? Very clear from the broken trend, from the next high, very clear series here. 1, 2, 3, 4, 5 lower points in a row. Notice how nicely they all match up. In a descending consolidation, we would have to extend this out into the future just to be prepared for any future attempts at this line. We would have to respect that unless otherwise proven to us. What else do we have here? We have a support zone. Notice the number of times. 1, 2, 3, 4, right? The brief 48-hour crossing below it. 4, 5, almost a 6, 7, 8, 9, 10, lots of mini hits in there, 11 times that this region between 1560 and 1610 acted as support. Something different is happening now. This market is breaking below a very important support zone. The nature of this is different than the flash crash. It has not recovered. It's been more than 48 hours below the zone. It has not recovered. The momentum indicator was not nearly as oversold as it was here compared to the flash crash. So something different is happening here. You have a descending consolidation, a flat support zone shown by black. All things considered, what can we talk about here? There is a negation of this support zone that is unfolding. So we had better pay attention to this in the silver market so that we don't go all in quite yet, or take some defensive action over the short run. Or perhaps if you are a silver accumulator, you simply wait until we have the next signal that shows that this market is at least attempting to bottom. You know, there's various ways that you can play this depending on your risk tolerance and time horizon and how aggressive you want to be. So we see this breakdown here. What are the ramifications? Look at the amplitude here. This amplitude, after the broken trend, we had an amplitude of what? $2.90 from the low of the downtrend to the high. The low to the high of a new trend, $2.90. There are contract holders, silver contract holders on the futures market in the amplitude of $2.90 that were hoping on each one of these bounces, hoping and hoping and hoping that this market would move higher, and what? Now they're all underwater. So anyone who bought after the middle of 2016 in silver is now underwater. And what should begin to happen is the amplitude of these contract holders, $2.90, should begin to sell to cut their losses as silver moves lower from this broken support zone here. And so we would expect roughly an amplitude equal to this level, to this amplitude, to be selling now that silver has broken below this support level. That's how this technical analysis works. It's not all hocus pocus, random lines drawn on a chart. I know for some, we can look at some people and notice I don't use every indicator that's out there. I focused primarily on price because, as I said earlier, I don't think there's anything that's more important than the price itself. We can talk about volume. Volume is a secondary indicator. We can talk about relative strength. We can talk about momentum. All these other indicators are interesting to look at sometimes. But in my opinion, nothing matters more than price. Moving averages even included. Price is the most important. So we see a breakdown in the price here. We have a measured amplitude equal to the number of contract holders that are now underwater. And all things considered, what do we have here is a target for the silver market equal to this amplitude below the support zone. It's $12.80. So this is my target for the silver market based on this form of analysis over the intermediate future, next several months, perhaps into the next year. $12.80. Now, it's not easy to get involved at the beginning of a potential bull market because why? Because we have many false starts like this. This is what washes people out of the market. People get involved and then they become uninvolved in a market in these consolidations and in these little mini bear markets, and then they are not around. They don't stick around for the real move. Why? Because people don't like to follow this kind of thing as it's moving lower, even though that is the most important time to be following this, to prepare for the next potential major low that is going to be setting up. Now we can talk about this. So according to these projections here, and this is the highest assessment, the highest probability assessment, silver should be moving lower down to $12.80. Now there's a caveat, which is that if you look back at this major low from late 2015, this low came in at $13.65. And so when you have a target, an amplitude target that gets close to a major low like this, you've got to say that between this target and 1365 is a confluence. There's two targets now. So we can label this as a zone. So this next low that I'm talking about could come in here at the 2015 low, and it could dip below that low down to 1280, which is the target that we're giving right now. You got to sometimes take a zone when you're speaking about these targets. You can have two targets that create a zone such as this. So I am going to be looking for the silver market to be coming down into this zone over the next several months, perhaps into the next year. And we will be looking at a next major bottoming signal potential setting up in that zone. Keep in mind how quickly from this bottom, silver moved almost 70% higher over the course of 6 months. A lot of the mining companies moved 200, 300, 400% higher in this whole move. So the time to pay attention to this as the bottom is coming into play is now. What would tell me that I'm wrong about this lower target? Okay, we talked about this breakdown. What would tell me that I'm wrong? As a technical-based analyst, I always say that I don't have complete knowledge. Of course, no one has complete knowledge, except maybe God or the sum of the universe, depending on how you want to look at it. But I certainly don't have complete knowledge. And so you have to, as an analyst, you have to look at where could you be wrong. Where would I say that this model is wrong? That maybe silver did form a little mini false breakdown here and it's getting ready to attempt one of those moves higher, one of those springboard kind of moves higher. We would be looking at a negation. You would need to see a negation of this level here, $16.10. The upper level of this support zone that was tested, as we said, almost 11 times over the last year and a half. You would need to see the market recover and at least climb back above that. That would be a first initial hint. And the second hint would be right here at this declining primary trend, as we've talked about, which comes in right near the $17 mark right now. In the future, this will be a little bit lower, as you can see. So notice, we're never going to get, only the absolute guessers, the absolute lucky will pick the exact price low, and even then they're only doing it on a fraction of their portfolio. So you should never feel bad if you can't get the exact low. It's a process of evaluating probabilities. And we're looking at where would this model show us that the lower target is not going to be hit, but we're going to be potentially looking at a new model. It would be these levels right here. Look, we're not talking about $30 silver. We're not talking about $50 silver. We're talking about $16, $10, and $17 for the next potential. This would be certainly well within the bottom zone, that at least we have a fair assessment here that this market is trying to move higher before the next major move happens. This is the power of looking at these trends and studying this on a regular basis, including when it is least exciting, which is now, or maybe painful, which is now. Let's get ready for this real move when it happens, but let's try to tune out these crazy stories about, fill in the blank, what stories can you go back and look at from 2005, from 2010, from 2013 that just turned out to be completely wrong? How can we really know? We have to look at the trends. That's the point of this channel and of the premium service that comes out. We do cover gold as well as silver. We also cover the mining sector and the individual companies that we are investing in here. We also cover the US dollar and the stock market from a relationship to precious metals. So what are the points in these markets that a gold and a silver and a mining sector investor would want to know about to be an informed investor? What are the points from a technical basis to follow? What are the trends playing up in all these markets simultaneously? That is what we look at. I also work one-on-one with individuals, whether by voice, phone call, or Skype. We also work by email sometimes if it's a quick question. This is simply if you're new or you're experienced in the precious metals and you would like an opinion on your situation that is based on research and analysis and not outlandish stories. This weekend coming up, we will be having a 1-hour special video. It will be in this format. It will be a lot more in-depth, and the points that we will focus on, we do this once every several months. And I'll probably do one of these here on the free channel here on YouTube. I'll do one of these over the next couple of weeks. But this weekend, we will be looking at gold and silver as priced in all these foreign currencies, because there are many investors from around the world, of course. You have your own situation going on. The most important cross-pair to look at, of course, is gold is priced in US dollars, because the mining sector and futures contracts are all still settled in US dollars. But we can get a lot of warning signals, early warning signals from all these other currency cross pairs as to what may be happening, which ones are looking stronger, which ones are looking weaker, and what are the levels that we should watch to either support or negate the thesis of these bottoms setting up or a continued bull market. So that will be coming this weekend, this Monday, in the premium 1-hour special video. I do thank you for tuning in. I know it's tough to keep an interest sometimes when markets are moving against us, but I would simply ask you whether or not you're someone who really wants to be involved in these markets for the long run. Do you want to be successful over the long run, or were you just trying to sort of get rich quick and hit a home run in 6 months and then retire on your private island? Because the world doesn't work like that too often. In rare occasions it does, but I would say if you really want to see this as an investment, as something that you want to get good at over the next several years, this is the time to be following it, even during the down cycles. So I thank you for tuning in. This time next week, I am not sure that I will be here. I do have some other engagements that I have to attend to. I will try to make a quick video, but I can't promise it for this time next week. Premium video comes out this Monday. Thank you.